Hello and welcome to our session, Incorporating Nature in the Heart of Business Decision Making and Disclosure. My name is Sharon Machado and I'm the session lead. And today I'll be talking to you about the call for businesses to act. And then I'll move on to the strategies that they should be taking. And I will outline the role of the professional accountant. But before I do this, what I'd like to do is introduce you to the fantastic panel I have with me today. Starting off with Sirpa Pietikäinen, MEP and Finland's former Environment Minister, and she will be sharing with us the EU policy position. Following her, we'll have Martin Locke, the Deputy Director of Capitals Coalition, and he will be outlining the approach that businesses should be taking to embed natural capital at the heart of the business ecosystem. We then have two case studies, one from Michael Beutler, Sustainability Operations Director at Kering, and he will outline the information needs to have that quality decision making and share with us Kering's approach to embedding natural capital management within their strategy. After this, Andre Jakobs, Programme Manager, Strategy and Sustainability at ABN Amro Bank, will talk to us around the importance of integrated thinking and integrated reporting to better understand impact, both internally for internal decision making, but also for external stakeholders. And he will be talking about how ABN Amro does this, recognising the challenges and the mitigations they employ. Now, the important area of trust delivered through assurance will be addressed by Eric Dugelay, TCFD member and partner at Deloitte. And then to bring this all together, we're going to have final thoughts from Thomas Verhey, DG Environment's Special Advisor. Now, as everyone is going to be sharing their thoughts, we ask you to share yours too. So please make sure that you use the chat box to share your thoughts, but also your questions. And we'll do everything that we can to answer those within the Q&A section. What we also have are some questions that we're going to be asking you to vote on. So please watch out for these. So what is that call to action? Well, if you think about the fact that 96% of the Earth's resources are occupied by us humans and the animals we consume, there's actually very little left for nature. Couple that with the fact that more than 50% of global GDP is dependent on nature, either moderately or highly, by businesses across all sectors. A failure to manage natural capital well will lead to scarcity problems as well as quality issues. And that in turn for business will create risks attached to strategy, finance and operation. Now, therefore, in turn, investors will lack confidence and with that potentially funds to drive continual improvement. And therefore, a vicious natural capital cycle can result. Now, other sources of call to action come from society, customers wanting greener solutions, employees choosing to work for more sustainable, ethically minded organisations. And then thinking about the all-important role of policymakers and regulators, putting in place the needed regulation for business to follow. And think about the opportunity that's potentially lost when businesses don't follow green strategy because they miss out on the plethora of green finance that's available to them. So let's think about what businesses can then do. And it's one of 4 R's, whether it's to remove impact by stopping that negative impacting activity as part of their strategy, or reducing impact. So therefore, thinking about better waste and land and sea management, for example, only taking what's needed. So then thinking about restoring, so therefore replenish what's been taken, but most importantly, thinking about reimagining success. So having the mindset of a sustainability trailblazer to do this. Now, all of these will lead to innovative business transformation. And this is where the role of the professional accountant is incredibly important. They have the capacity to think holistically and in an integrated way, drawing on all of the resources that businesses use. So with that, what they will be doing is thinking around how to formulate and evaluate natural capital strategy to help gain the investment that's needed to finance it, and formulating, evaluating, and executing the policies and the processes needed. And then, of course, communicating in a reliable and relevant way to impacted stakeholders through the important function of reporting. Now, accountants aren't superheroes on their own. They work in collaboration with data scientists and natural capital experts, and together they draw on their integrity, their technical expertise to drive better solutions. And so with this in mind, what I'd like to do is introduce the first of our speakers, Sirpa Pietikäinen. So if you can take yourself off mute, you have your 5 minutes.
Thank you so much of introducing this important topic, because I think that if anything, it is the businesses, it is the investments, and it is the accounting that can save the world. And what the future business leaders need is the understanding of a complexity, system thinking, so understanding the interaction between resource efficiency, biodiversity, ecosystem services, climate change, economic profitability, the costs of non-actions, and so forth. They need the agility to develop and change their businesses on the fast-paced moving world, of course, with the digitalization, but because we know that the environmental challenges are increasing and they are accelerating. So they need to be accelerators on the change on their own businesses. And they need to be future-proof. They need to know what to expect, and they need to understand the ecosystem dynamics and ecology. And while what we do not know, we can't act upon, and what we do not measure, we cannot know. And that comes directly to the taxonomy, to disclose regulation, to upcoming non-financial reporting directive, and the role of accountants. As important for the businesses as it is to know throughout the whole life cycle of the production and marketing the costs and the benefits and the returns, it is to understand what is the ecological impact of their investments, their raw material sourcing, their business partnering, and their product and its lifespan. So they need natural capital accounting. And they need this information, and the investors need this information in harmonized, compatible formula that is compulsory for everybody, just like it is in IFRS or it is in accounting, so that they can measure and they can compare industry-wise or in general on business-wise their effectiveness and innovations, and benchmark the direction where to go. The idea in disclosure regulation is that the investors need to understand the risk of their investments, the triple materiality. That means, of course, the financial materiality, then the direct climate change and other biodiversity and environmental impact on the business. For example, if the sellers are flooding. But the triple materiality means that if the investments are somewhere that worsens resource scarcity or climate change, they are actually destroying their own business possibilities. And insurance companies are perfect on this kind of evaluations. And so they need to de-invest out of there. And to expose what amount of their money is in unsustainable, that is in the longer run, and what amount is in green, in positive investments. But for them to know what to report and where to invest, what they urgently need is the non-financial reporting directive. I would prefer to have it in directly on accounting directive and on integrated reporting, where you would have two parallel reporting schemes, the financial and the ecological with these harmonized indicators and life cycle analysis from the genuine cradle to grave. And then it should be audited so that we know, and on that it is on responsibility of company boards, and that we know that what you say and what the companies say is actually the truth. Then, okay, where do you let the basis? I'm very encouraged by what is happening all over the world in natural capital accounting, in different platforms, initiatives, and of course, and we'll hear it later on in the Commission. What we would need to do now globally is to put these different kind of natural capital accounting initiatives together and incorporate it with the taxonomy that is the basis for EU setting the standards, what to measure and how to measure. And then, as said, NFRD and disclosure is how to report and how to take into account. We are in baby steps, but we are taking the work forward, and I'm convinced that we need all the specialists in financial sector, on industries, and especially in auditing and accounting to really make this to happen. And I'm very happy to all of your advice and the cooperation what we have already had with the ACCA, and looking forward for your initiatives and proposals in the future as well. Thank you.
Very much, Sirpa. And what I'd like to do is take the opportunity now to move on to Martin, who will outline how we should be doing this within our businesses. Over to you, Martin.
Very much, and good morning to everyone, also from my side. I'm speaking on behalf of the Capitals Coalition. If you don't know that, can you please move to the next slide? We are a collaboration of over 370 organizations, and we collaborate around a shared ambition that by 2030, the majority of business, finance, and governments will include the value of nature, people, and society in all of their decisions. So one of the things Sirpa said that very much is in our heart is that we have to put the initiatives together, so not just one initiative. So that's why we are a collaborative organization, bringing together all the front runners in this sphere. Another thing Sirpa mentioned was you have to understand the complexity. So the way we do that is by using a capitals approach that includes the value provided by nature, people, and society in all kinds of decision making. Such an approach has the advantage that it helps you to better understand impacts, but also your dependencies of nature and people. It helps you to see a difference between the measurement, which sometimes just is a number, and the value, the relative importance it has, a natural resource has for you. And it also helps you to see the interconnections between nature, people, and society. Please go to the next slide. So I said our shared ambition is by 2030, the majority takes nature and people into account. We fully agree that at this moment, we are not yet there. So we have an approach to get there, and that is to simply put, create 4 different changes. First of all, we want to change the math. In maybe more simpler wording, we have to change the way we measure success. So how business, finance, markets, and governments value their relationship between nature, people, and economy as an element of the success they are achieving. For this, it's needed to change the way we have conversations, and also to change the people we have conversations with. Simply put, in a business context, if it's only the sustainability people having discussions around nature and people, we are not going to change the way business is operating. We have to bring in the financial people, the buyers, the salespeople, etc. Then moving to the third change, changing the rules of the game, a very important element. By reshaping motivation and incentives, we really will drive decision making into another direction. changing the rules is not only government regulation, although that is important. Yes, of course, a discussion whether or not to put that in the accounting directive is a relevant discussion in this respect. But it also has to do with the incentives within the private organizations themselves, for example, industry associations, or in the norms that society uses as a kind of a yardstick to see how businesses and their leaders are operating. At the end, based on these three changes, there will be a change of the system, and the value of nature and people will be embedded in all decisions, is our approach. So please go to the next slide. We don't start afresh on this at this moment. We already have invested several years in developing other ways to success conversations and changing the rules. So you'll see here on your left side a couple of the things we have published as Capitals Coalition, some of them really recently. So there's the two protocols, Natural Capital Protocol, the Social Human Capital Protocol. Also, beginning of this year, we published a report on improving the visibility of natural capital into financial accounting. And we have launched additional guidance on biodiversity and specifically for the agricultural sector together with UNEP. And if you move to your right, there I've put a couple of projects that are still running and that are key to what we try to achieve the following years to come. A key element in there is the EU and the Green Deal. You see a slide to the right corner on the bottom. With the Transparent project as a key project that we are developing together with the Value Balancing Alliance. In this project funded by the EU, we are harmonizing, standardizing the way companies measure their impacts and embed that into their disclosure. So this also goes back to one of the things Sirpa mentioned about the need to further harmonize the way we measure success. Also, we recently launched a consultation on a new paper where we have formulated the principles for a robust integrated assessment. So not only an assessment for nature, but including people and society as well. And the last thing I wanted to mention here is the 2020 Super Year for Nature, as it was planned to be. It will now be the Super Year 2021 for Nature, where the world will come to hopefully an agreement similar as in 2015 for climate change. In Kunming, in this case, for biodiversity. And one of the key elements on the table to really embed in this world agreement for biodiversity is the need to value nature into all decisions and also disclose the interaction with nature as business. Please go to the last slide. Something which is key to us is that what we want to achieve is what we call a positive feedback loop towards a new normal. Maybe some of you recognize this from others, but it's only if a government, finance, and business work together, we can create the change that we need. Thank you very much.
Very much for that very sort of in-depth explanation. What I'm now going to do is move on to the first of our two case studies. So over to you, Michael, and let me know when you need me to move slides. Thank you.
Sure. So, hi, my name is Michael Beutler. I'm from Kering. Kering, you may know some of our current brands, Gucci, Balenciaga, Saint Laurent, and some others. And you may know Bottega Veneta, I shouldn't forget. And you may know some of our past brands, such as Puma. And in fact, that's where we piloted the environmental profit and loss initially. Next slide, please. Environmental profit and loss for us was our first foray into natural capital accounting, and It may have been one of the first of any company. That's one of, certainly was one of the first for sure, that we know of. And we, at that point, had really trying to ask the question, what are our environmental impacts in the broadest view? How can we take a look at what our entire responsibility is in terms of what resources are we using from nature? So that's how we conceived the environmental profit and loss is a way to measure that, if you will. If we were to write a check to nature for everything we took, how much would that check be for? And obviously, the internalized costs today are not at a fair level of understanding in terms of, there's really no cost for clean air in many cases. You can buy a right to pollute, but it doesn't capture land use. It doesn't capture the social cost. So what we endeavored to do was get that full picture in a monetized viewpoint that we could use as a tool to communicate with our business. In this slide, we show two axes that are very important. One is the environmental impacts going down the left axis, and the other is the depth of the supply chain. In other words, starting what we call with tier 0, which is our operations and stores, and going all the way back into the raw material sourcing. And you can see very graphically here by the size of the circles, the amount of impact there is, and clearly the biggest impact was in our raw material sourcing, which when we began this journey is the part we knew the least about. So now we use this as a tool to reduce those bubbles internally. Externally, that's a public tool, and I'll show shortly some aspects of that tool. This is actually in the report tab of that public site. And the other interesting thing, and what we really gained insight, was to look at our raw materials, and we see that leather, which is the biggest, if you look at the two bar graphs, the bottom graph is the amount of material we buy, and the top is the impact. And leather we knew was a high impact material because we use a lot of it, so we figured, okay, we're going to have a high environmental impact. But what we discovered is animal fibers have a huge impact. That's wool and cashmere, for instance, and metals, little fasteners and buckles. A small quantity can have a huge impact. So these are the areas we focused our reduction efforts. But it's important to keep in mind, natural capital accounting isn't just an external tool. It can be a great internal tool to help manage your impacts. We've used it as both, but I think it's important that to take the time to put the robustness into the tool gives you the results. And we had to look at all the different processes we had to create our products in all the different sourcing of raw materials, which at that point had not been a question we had asked through our supply chains. But by going through that exercise, we gained a lot of big business insight, going beyond just environmental impact, but understanding where our risks and opportunities were. Next slide, please. So this is a look again at our online tool. You can drill in by country, by raw material, by business unit. It really is quite a radical transparency in some ways that we've exposed our entire footprint to the public. The idea behind this also was that we open source the data that's available. And if you go to the next slide, there's a latency. We show some of the different aspects that we show here of also the impacts and the relative to each kind of eKPI, which is the environmental impact, and then there's a quantified KPI, which takes into the account the valuation. Next slide, please. And here is where we show some of the open source data, because our idea was not to just use this in a vacuum. The idea was, in fact, that other companies could download the data, and other industry players, because this is a profile particularly for the raw materials that are used in fashion, but that other industry players could use this data to help drive business decisions, to help find their hotspots. And in fact, we've heard from other fashion brands, they have done that. But really the idea, I think what's very important when it comes to this kind of data is to be able to share it, and to be able to share it within the community, not only of like companies and like organizations, but also to stakeholders, so they can start to understand better the footprint of other organizations and understand better comparative for investors, for governments. But I think what's important here really is open sourcing and sharing as much of the data and methodology as we can, so we can all help create this robust system of natural capital accounting that can be comparative within an industry, across an industry, to really, to me, I think it's the most comprehensive measure of environmental impact that we've seen so far today. And that's my final point.
Thank you very much for that practical insight. What I'd like to do is move on to my second practical insight from Andre, please.
Thank you, Sharon. Well, good morning, everybody. In the upcoming 5 minutes, I hope to tell you something about how we try to report our impact, how we try to measure it, and how we basically try to balance the 6 capitals. Next slide, please. Maybe next slide. Yes, there it is. Well, as you see, this is quite a... Don't try to read... No, previous slide. Well, this is also quite complex, but I want to try this slide first. Don't try to read all the details, because this slide is here to give you some sort of an impression. It looks complex, and that's basically what it is. What you see here is 2 pages out of our integrated annual review, showing our value creating model. We use the 6 capitals of the IRC framework to question our stakeholders and try to measure and show our output and our outcome. We do this each 2 years. This is assured also by our assurance provider. So this gives some sort of an idea about the quality of the data we deliver. What I want to zoom into is the part on the right you see on this slide, the part with the bubbles in it. This is where we try to show our impact as a bank related to our 4 stakeholder groups. I'll go into this in our next slide. So next slide, please. What you see here is, well, data and figures from our impact report. First, we go to the top far left. The picture with the bubbles. You see here on the far left the 6 capitals, the 6 groups we use, and on top you see the 4 stakeholder groups. So we have our clients, we have our society at large, we have our investors, and we have our employees. So we try to measure, according to these 6 capitals, for each stakeholder group, whether we create value or we basically destroy value. What you see here, you see gray and green bubbles. Gray mean from the perspective of the stakeholder we destroy value, and green from the perspective of the stakeholder we create value. This normally takes some time to get a grip of it. So I usually give an example. If maybe you look, if you can see it in the same picture, a green bubble on the far top right, from the perspective of society and from the financial capital, we seem to create value. And normally I ask, how do you think that this is the green bubble? What you see here, that we pay taxes. So the size of this green bubble gives an idea of the amount of taxes we pay. and so the value we create for society from a financial perspective. The most relevant part in relation to this presentation is the top of the bottom of this picture. You see here the natural capital, and when you go to the our stakeholder group society, we create negative value for natural capital. We try to measure our natural capital, as you can see on the picture below. You see here. No, I also have to go. You see here. We use, based on the natural capital protocol, we use some indicators to measure our natural capital, whether it's positive or whether it's negative. And you see a lot of gray dots here, which is obvious because we still destroy value from a natural perspective. So we try to use this as input for the bank for our decision making, and our aim is to minimize these gray bubbles. So we try to measure this each year and see if our actions, which were planned and were determined by our IRC protocol and our IRC approach, gives as a result less negative impact on, for instance, natural capital. So for the end, if you see the picture on the right, those are the 52 indicators we use measuring our 6 capitals. I won't go into that too deep right now because my time is already out. But go to our website, abnamro.com. You can see this all, how this works. We're quite willing to show and help everybody with this because we think this is a good way and it gives a good impression on what the effect of your action is as a company. So if you look to the next steps we're willing to take, when it's about impact reporting, we try to make this more communicative because this is quite complex when you see the slides. I want to see if we can improve our system of measuring so we can incorporate in day-to-day decision making. For now, it's more or less a quarter or tops maybe a yearly exercise. Thank you.
Thank you very much for that. And actually to both of the case studies, there was a lot of information that we've seen there. And as Andre has outlined, do go and have a look at what these organisations are doing. And even if you're only starting your journey, it's really important to think about how what they're doing can be adapted for your organisation and your approach. Okay, so what I'd like to do is just move on now to Eric, who will outline the really important angle of trust and the role of assurance in that. So over to you, Eric, for your 5 minutes.
Thank you very much, Sharon. And let me tell you how delighted I am to be with you all. It's quite a privilege to be with this group of 134 people. I took note of the fact that this all started with 86 and as the time was going forward, we got more and more people attending, which is a very good sign. We have heard from Sharon and Sirpa that the accountants should save the world. This is a quote by the head of the World Business Council for Sustainable Development, Peter Backer. So I feel a little bit embarrassed because as a member of Deloitte and a partner with Deloitte for the last 20 years, I'm not personally an accountant, but I can tell you that you don't need to be an accountant to be really interested in the topic of, and if we can use my first of 2 slides, the topic of accurate and smart information. If you could just show the slide, please. Thank you so much. The topic of smart information, which is specific, measurable, achievable, rather than timely or time-framed information, is absolutely key. I have been trying, if you want to, dig a little bit into the topic of natural capital over the past, let's say, 15 years. I remember a conference of parties in Hyderabad and Pyeongchang for instance, on natural capital. As you know now, it's all climate. And I am a member of the Task Force on Climate-Related Financial Disclosures, but climate is on the top. Natural capital is a little bit below, but I see the momentum big time. And the first mover, indeed, Michael, it was you. It has to be said, you were a little bit reluctant saying you were first, but you were first. The environmental profit and loss of caring came as a promise that we could monetize. And you did monetize at caring. The point is, how can we now, as a group of companies, use the same approach and a seamless approach and as a unique approach to actually measuring our impact and our dependencies on natural capital, quite importantly as well. Some of us depend on wood, some of us depend on flowers to create alcohols, etc. This dimension is sometimes forgotten. So climate is overwhelming, but natural capital is coming. We can see this initiative by the Capitals Coalition to, in a way, rejuvenate the Natural Capital Protocol. The Natural Capital Protocol is available. It's great, but it's in a way a framework on the various frameworks. We don't have anything such as the GHG protocol, if you want, which is very focused on CO2 and greenhouse gases and gives ways of calculating those, scope 1, scope 2, scope 3 emissions. This is all neat. Everyone calculates the same way. There are big uncertainties, but at least we have that. So the future would be to have the same for natural capital. This is the dream I have. The dream I have is, again, to have smart information on impact and dependencies on natural capital. And so my career has been, actually having clients trying to develop those. It's always interesting to develop specific disclosures on the strategy and the management and the performance, but it would be even better, and if we can move to the next slide, as I said, it would be even better to have a single way of calculating those. No, I'm sorry, the previous one, my second slide. And yes, so the way of building trust, if you want, would be making sure that everyone speaks the same language. If that happens, then people would trust companies' disclosures on climate and, on natural capital. This is a busy slide, but what I want to say here is these are quotes actually of a paper that Deloitte sent to the European Commission when we were asked to respond to the EC consultation on the revision of the NFRD, the Non-Financial Reporting Directive, this year. We definitely at Deloitte want to promote the idea that there should be standardization. There are outstanding initiatives at the moment at the European Financial Reporting Advisory Group, the EFRAG Lab, as well as the IFRS Foundation. It will come. I'm very confident that we, at a stage, we shall have a common language, we shall have a common way of reporting. And very importantly, on the right side of the slides, you have a paragraph on what we at Deloitte believe external assurance should be on natural capital and beyond that ESG. My point is there should be a way towards reasonable assurance on such disclosures. Reasonable assurance is the assurance that is used by the accounting profession on the financial information, and it should be the same type of assurance that companies such as the accountancy firms such as Deloitte should be providing. And I'd be really delighted to be able to answer your questions. There will be time for that, I guess, but for the time being, I shall pause here.
Very much, Eric, and actually to all of our speakers so far. What I'd like to do is take the opportunity now to share with you and get your thoughts with this polling question. So the question, what are the skills and competencies of business leaders and finance professionals to be able to do all the things that our speakers spoke about? So if you can start voting, please go. But whilst we're waiting for the poll to come in, I wonder if one of our speakers would like to share their thoughts as to what the skills would need to be. And you can take yourself off mute. Okay, so some of our speakers are certainly voting for the great green finance knowledge. Yes, seems to be a bit of a split of votes here. I think from my perspective, that solid understanding, depending on your role, is going to be incredibly important here. Okay, and in terms of the votes that are coming in, by quite a significant margin, understanding the risks and incorporating these into the business and planning process. And I think that actually all of our speakers spoke very clearly towards that particular point. So on that note, what I'd like to do is open up to your questions then. And in terms of the questions from the audience, let's have a quick look. What I'd like to do is perhaps ask the first question, actually, which is connected to the poll in many respects. So what's available for finance professionals to identify and monitor environmental and natural capital impact? Now, we've heard from Martin very specifically on this. So I wonder, Martin, if you'd like to perhaps add any further comments that you'd like to make that you didn't have time to deliver, and then potentially I'll pick up on another speaker as well, can volunteer themselves. Martin, if you would take yourself off mute for me, please.
I just did that, and thank you for the question. So I refer to the Natural Capital Protocol and the Social and Human Capital Protocol. What I didn't tell you is that there are also some additional sector guides and supplements available. One is specifically for the financial sector. So if you go to our website, you can find the content of that. Also, you will find a link to the Natural Capital Toolkit hosted by MIT Shift in Harvard. And one of the tools there that you can find is the Encore tool created by UNEP WCMC together with other partners. This Encore tool is specifically designed for the financial sector to better understand their risks related to nature loss. It is used by several financial institutes already, including a group of banks that created a footprinting methodology that was launched a couple of weeks ago also during one of the UNGA meetings in September in New York. Thank you.
Thank you. Before I move on to my next question, is there anyone else that would, from my panel, that would like to contribute? Otherwise, I'm going to move on to a question on assurance. Okay. Thank you. So thinking about the point around assurance and is incredibly important when you think that society isn't an integrated part of business itself, and so therefore but is indirectly impacted by everything that business does. So making assurance really important, being that connection between business and society at large. So if I can ask Eric perhaps first, given that you talked very specifically around the role of assurance, so how do you think that independent assurance contributes to transparent, relevant, reliable and comparable non-financial information? And if you can just take yourself off mute, please.
I think indeed I've been advocating the case for external assurance on non-financial information for the last 20 years because as a French person, there was the Nouvelle Régulation Économique, the NRE, that came in 2001, which made it mandatory for companies to report. And some of these companies came to us and said, can you hear me? Yes? Some of these companies came to us and say, can you give us assurance on what we are disclosing? And this all started there. France was actually in 2013 with a law to make it mandatory actually to report, to have assurance. I'm not sure you can hear me. I think the
Anna, Eric, we can.
microphone is unmuted, but apparently there is something that is going wrong, technically speaking, but indeed having the same type of assurance as we have on financial information is. Can you hear me or can you not hear me? You can. This is funny. It comes really at the time when it shouldn't stop, but it stops when I'm asked a question. Sharon, can you tell me whether you hear what I say?
I can hear you very clearly. But perhaps if Andre, for example, would like to perhaps contribute his thoughts as well.
Sure.
And that separation piece.
Okay.
Some people say you can hear me. I'm so sorry. Yeah. Excellent. Thank you so much.
Okay, I heard some late sounds beside me. When I look at assurance, I mean, ABN AMRO, we had assurance for, I think, 5 years now. First on our sustainability report, on the non-financial data and the sustainability report. Afterwards on our integrated report, on the RSA methodology we use. So when I look back, it gives you more momentum internally. So when this data is assured, you can talk to your stakeholders like, this is really true what we're telling you, but also internally, you can tell your colleagues, this is relevant and these data are true. Normally when you're in a sustainability environment, there are sometimes departments that are not that willing to take sustainability into account. I'm not only talking about ABN AMRO. I mean, I worked for a sustainability consultant for 25 years, so this is also my experience, a broader experience. It works very well. So when you have these data assured, you have somebody else looked at it, tell them these are good data, they're valid, and they tell a story. And you can use this story externally and internally as well.
Thank you very much. I'm just mindful of time here. So whilst we did have a few more questions, what I would like to do is perhaps move on to the next very topical question. And perhaps if all of these speakers can take themselves off mute for this next question. And the next question is one that's also out to the audience as well. EU policymaker requirement or business, and perhaps if possible we could start with on your thoughts.
I'm sorry, who, me?
Yes, if
It just blanked out. I think it would be a few things. One, we need to think not in terms of European policy, but international. And I think that's going on with the non-financial reporting directive. It's also going on with EGAP. I'm hoping those two will also join together. But we need to think of TCFD. We need to think of what our investors, what are our stakeholders asking for, because what we don't want to do is create yet another framework for international companies to report against all the other frameworks and ratings, etc., that we have. We need to get a clear picture of, I think, in a company's using the TCFD mindset, the transitional risk in terms of how are we mitigating our own impacts, and then how are we responding to climate change and other beyond just climate change. But climate change is for the topic right now. But changes in land use, changes urbanization, there's all kinds of other changes going on. How are we responding to those? And I think it would be great if the new requirements are something that can help level the playing field in terms of what kind of information that we report, and also it be useful information that can help drive decision making and hopefully drive environmentally friendly capital to the right places.
Very much. If there's one more reflection that anyone would like to share, and then what I will do is move on to some final thoughts that pull together the discussion today. So if there's any other speaker that perhaps hasn't spoken yet that would like to share their thoughts on this important question.
This is Sirpa Pietikäinen. Can I comment?
Yeah, Sharon. I have spoken, but I was interrupted. And if I may contribute on that one.
And then we'll pass on to Sirpa, if that's okay.
Sirpa should go first. Sirpa, you should go first, and I shall finish. All right. I think you're asking me to continue my comment on this particular polling question. I think what the EU policymakers should be doing, and they are very active, it must be said, they are amazing in a way, is really asking companies to really go beyond solely the disclosure world, solely the reporting world. And the EU policymakers should think about the performance of the companies first, before the disclosures on the performance. And in order for this to happen, the new regulations or new directives should probably ask companies to reflect upon a broader time horizon than has been the case. I think that part of the success of the TCFD is that the disclosure on climate-related scenario analysis asks companies to reflect far beyond the next year and, let's say, reflect upon the 5 or 10 years to come. And the second point, the EU policymakers should think about asking for disclosures on targets. Because if companies do report on their targets, then they are in a way liable for comments in the future if they haven't reached those targets in the future reports. These are my 2 points. Thank you.
Now to Sirpa, please.
Thank you. First of all, about these insurances, and that links to this question. I think that what we need now is to have innovative legislation that is effective. For example, I've been thinking and trying to push forward of having this kind of a compulsory insurance model, that before you get any permits to build or install an industry or have an environmental permit, you would need to have an insurance. But that would not to be compulsory for any insurance company to grant the insurance. Because then actually, if you would have too unclear or high risk businesses, probably you wouldn't be insured, or the insurance would be so expensive that actually that would make you consider what you are doing, and the compulsory insurance should be concerning all the long run environmental liabilities and costs for societies. This is one part. Then the another part is the transitional plans in company law, that all the companies, at least listed companies, should have a transitional plan, as we heard already the advanced companies are doing, how they are going to be resource efficient, sustainable and climate neutral by 2030 or 35, or in some other cases it could be a longer run. Then it should be in annual reports followed up every year. And what I would ask you to do is to have a strong lobby towards the politicians, because those ones who do not yet get this point or do not want to have this are lobbying politicians very strongly, saying, no, can't do it, it's too costly, it's too difficult, do not mix the water with oil, that is the ESG with the economics and business administration and so on. So you really need to raise your voices on here. Then maybe in the last minute, or I use my last minute now and give the rest of the time for you, because my only last point would be, if any of you care to comment, what should we do as legislators to ensure that we would have this kind of a, in quotes, IFRS of ESG accounting, so standardized, harmonized, total LCA in global level, and how could the businesses help to incorporate and sort of emerge together the existing different 250 calculation models? Thank you.
Thank you very much, Sirpa. What I will do is, Martin, I know that you've got some important points to make, so if I can give you 30 seconds to make those points, and I will close the session with Thomas as well.
Okay, just in 30 seconds, legislation is important, but by itself it's not the only bullet or silver bullet that we need. I think the EU can play an important role in supporting the capacity building within businesses too. We want them to change their management decisions, and disclosure just by itself won't do that. So if the EU can support it, for example, by creating communities of practice where business can come together to collectively apply more standardized measurements and impact tools, that would be really helpful.
Point, Martin, that a lot of our speakers are talking to and commenting on as well. So if I can pass on to Thomas for your final remarks, and also just to thank all of the speakers for contributing their valuable thoughts. Okay, I understand that Thomas is having a few technical thoughts. So some technical problems. So what I will do is pull together the very sort of high level points that I'm aware that he would be talking to. So one, this is a journey of moving parts. You know, natural capital is a material issue for many businesses. And if we think about, and I can't remember exactly who mentioned this point with regards to triple materiality, it may have been Sirpa that made this point. Risk management has to be the heart of what we're doing. So therefore, a fragmented approach is really not going to work for us. And to close that gap, we need transparent and consolidated reporting that brings this all together. And so with that in mind, this journey has to start for all businesses, but not just the large ones. We can learn from them, but for SMEs, small and medium enterprises too. And with that, I'd like to leave you with a big thank you for attending this session.